Excess in risk-taking, excess in leverage, excess in opacity, complexity, compensation, and all of that led to massive destruction.
It's hard to imagine a time when capitalism was less popular than it is in today's post-financial crisis world. Christine Lagarde, the managing director of the IMF, has warned that efforts to build a safer financial system after the crisis have been too slow. And she blamed the financial sector for attempting to halt the introduction of tougher new rules. At a conference at London's Mansion House on inclusive capitalism, the Bank of England's Governor Mark Carney echoed Ms Lagarde when he warned of damage to the social fabric. But how can capitalism be reformed so it's more inclusive? And can public trust in market institutions ever be fully restored?
The FT believes that capitalism is, and free markets are the best model. We certainly don't believe in command economies, but we also think that the benefits of capitalism need to be widely shared, and we don't want perverse incentives.
In the United States, in 1965, 19 out of 20 men between the ages of 25 and 54 were working. Today, we're down to 6 and 7 are working, and it's going to be about that way even when the economy has fully recovered. So we're not doing as well by a large number of our fellow citizens as we might hope to, and that's a challenge that's going to require attention.
There's a lot of debate about who should be giving that challenge the most attention, and whether it's really the role of the chief executive or the government to shoulder the responsibility.
One of the CEOs, I'm not allowed to say exactly who because this session was on off the record on Chatham House rules, one of them made a very interesting point about you have to decide where your home is. And once you've decided that, you need to interact with community leaders, business leaders, etc., and be part of the community.
There's much that government can do to put people to work, but we're going to need to recognize that government is an integral part of a capitalist economy rather than treating government as a necessary nuisance, which has become too much of the culture.
We need to have both the private sector, the government, and the development world agencies come together to address the issues that each is best capable of addressing. So for instance, government should help create the enabling environment that will enable private sector to do well. The private sector should be able to take advantage of the opportunity, the enabling environment created by government to invest. And when they invest in key sectors like power.
But who's got it most right? Which of the various forms of capitalism that have evolved around the world has created the most social value?
There's a lot of hot talk about the Nordic model. You have obviously higher government spending in order to provide a big, wide social net, but also businesses, very enlightened, got lots of women on boards. So the Nordic model is something to look at. But just one last thought. The problem is in advanced industrial democracies which are not creating enough jobs net, and also people are not well educated to deal with this vast upheaval caused largely by the technological digital revolution.
To address poverty or inequality in a sustainable fashion, we must tackle or create the environment that will enable us to attract more investments, so that as you make more investments, the private sector will do.
Actions are affordable. Indeed, I think the question may be closer to saying, can we afford not to, in terms of the consequences of social exclusion, the consequences of stagnation. People speak as if borrowing money is doing something that's not affordable, but deferring maintenance is doing something that's eminently affordable. Both are putting burdens on the future budget. It's putting burdens on the future budget when pensions are underfunded. It's putting burdens on the future budget when the civil service is understaffed. And so I think we need to take a much broader view of what constitutes budget deficits as we think about government action.
The financial sector is under fire like never before, and faith in market institutions has rarely been lower. Policymakers that have tried to reform finance in the wake of the crisis haven't been helped by scandals such as the alleged manipulation of the LIBOR interbank lending rate. And with resentments over inequality growing, governments and business leaders have their work cut out restoring public trust in capitalism. Daniel Garrahan, Financial Times, London.